Hey everyone, welcome back to Thoughts on Investing. Today we're breaking down the sharp market movements that hit the tape between April 27 and May 3rd, 2026. As always, a quick reminder that this video is strictly for educational purposes and is not financial advice. Going into the week, investors had priced in a relatively calm outcome. The consensus across Wall Street was that scheduled diplomatic talks between the US and Iran would go forward, keeping tensions in check and oil flowing. That outlook broke down immediately. President Donald Trump abruptly canceled the planned peace negotiations, erasing the immediate prospect of a diplomatic solution. When diplomacy stalls, the natural move for investors is to exit risky positions, and that is exactly what played out on trading floors globally, as markets turned cautious and sold off aggressively. The shift shows how a single decision in Washington can override months of steady data, replacing a stable trend with a cycle of extreme price swings. The breakdown in talks came with physical enforcement. The U.S. tightened its naval blockade in the Middle East, actively restricting major shipping routes. This map shows the critical choke points: the Iranian coast, Karg Island, and the Strait of Hormuz. Because cargo vessels cannot safely navigate these channels, millions of barrels of crude oil are trapped at the ports. This creates a compounding logistical backlog. Iran continues to pump crude out of the ground, but with exports blocked, they are rapidly running out of physical storage tanks to hold it. If those storage facilities reach absolute capacity, operators will be forced to shut down the actual wells. Pausing production in this way can damage oil fields over the long term, making it difficult to restart when the conflict eventually ends. What began as a diplomatic pressure tactic has cascaded into a mechanical bottleneck in the global energy supply chain. That physical bottleneck immediately hit the trading screens. Take a look at this line chart showing crude oil prices over the past week. You can see a sudden, sharp vertical spike where crude rips right past the $110 per barrel threshold. Expensive oil bleeds directly into the consumer economy. We are already seeing the impact at the pump, with regular gasoline climbing past $7 a gallon, raising the cost of everyday goods. This flows right into macroeconomic policy. Looking at this flowchart, we can trace how a spike in crude oil directly feeds into rising inflation. Because inflation fears have returned strongly, investors are worried central banks will delay their planned interest rate cuts. However, this volatility is creating profits for specific sectors. Energy companies, which benefit directly from high crude prices and tight supply, saw their stock valuations surge this week. Interestingly, the tech sector also held its ground. Even with global instability, investors continue to park capital in artificial intelligence and tech infrastructure, betting on long-term growth arcs over short-term geopolitical noise. And despite the pain at the gas pump, U.S. consumer confidence actually climbed to a 4-month high this week, showing that the domestic economy still maintains a strong foundation. We are left with a fractured market. Sectors like energy and tech are thriving on the current conditions, while the broader market faces the heavy drag of sticky inflation. The timeline for this conflict is expanding. President Trump indicated that the naval blockade could remain in place for months, officially removing the prospect of a quick fix. Markets struggle with open-ended uncertainty. Without a clear end date to the supply bottleneck, investors have to price in the risk of further escalation, meaning we should expect this volatility to remain high. Instead of focusing on balance sheets or interest rate targets, investors are now tracking naval positions and diplomatic cancellations. Moves made in the Persian Gulf are currently dictating the price action on Wall Street. So I want to hear from you. Do you think oil prices will continue to climb as the blockade drags on, or are we due for a crash next week? Let me know down in the comments. If you enjoyed this breakdown, hit the like button, subscribe for weekly updates, and I'll see you in the next one.